Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Hello, everyone, and welcome back to another episode of Living Your Greatness. This is your host, Ben Mummy. Today, we have a new guest to the show, and his name is Peter Grandich. So for those of you who don't know Peter, he actually entered Wall Street in the mid-1980s with neither formal education nor training, and within 3 years was appointed head of investment strategy for a leading New York Stock Exchange member firm. Peter would go on to hold positions as a portfolio manager for 4 hedge funds and a mutual fund that bore his name. Peter's abilities have resulted in hundreds of media interviews, including Good Morning America, Fox News, CNBC, Wall Street Journal, Barron's, Financial Post, Globe and Mail, US News and World Report, New York Times, Business Week, MarketWatch, Business News Network, and dozens more. Peter has spoken at investment conferences around the globe, edited numerous investment newsletters, and was one of the most sought after financial commentators at Money Talks. So Peter, welcome to the show. It is a pleasure to have you on with us today.
Well, thank you, Ben. Thank you for the introduction, but let your listeners know that I still pay $2 for a cup of coffee.
Absolutely. So Peter, let's kind of get kicking here. If you could just share with us a little bit about your background, so tell us more about your formative years, where you grew up in the United States, and what led you to a career as both a chief market strategist and a portfolio manager.
Sure. So born in the Bronx, New York, raised in New York City. I entered Wall Street only because as an investor, I had lost a lot of money through a penny stockbroker, started an investors club, was discovered by a gentleman that owned a small brokerage firm. Within a few months of being a stockbroker, because that's what we would call back then, I wanted to get out because I couldn't cold call. So I started a newsletter, got a little local press, turned it into some national coverage. As you noted, got appointed head of investment strategy for a New York Stock Exchange member firm. And in 1987, put out a forecast in August of that year of a coming market crash. And believe it or not, it wasn't the forecast I got the claim to fame. It was the fact that the firm wanted me to retract it or resign, which I didn't. October 1987 came, which was then considered a crash that rivaled the 1929 crash. And then the next day I said that within 2 years, the market would be back at a new high. It did. So by the mid-90s, I had some fairly good fame. As you noted, I managed some hedge funds. I managed a mutual fund that bared my name. And in the mid-1990s, at age 39, I reached what I thought and what people said back then was the American dream, enough money to kind of retire at 39. Instead, I became a consultant in the world of metals and mining. I wrote newsletters. I bought 5 racehorses, 2 race cars, and then took up a terrible male addiction called golf and became a legend in my own mind and was turning the 10 Commandments into the 10 Suggestions. In late 1999, I would suffer the first of 2 debilitating bouts of depression and a very large loss of money. And I would really, at the first and only time, take a serious look at my Catholic Christian faith. At that time, I also would meet a gentleman who was a running back at the time, past running back on the first 2 New York Giants Super Bowl team. And we would form a company called Trinity Financial Sports and Entertainment Management that would provide Christian athletes not only financial advice, but hopefully backed with Christian teaching. 2008, I found myself with many professional athletes as clients, mostly in football and some in hockey. And I would spend 13 years working with the New York Giants and sometimes with the New York Yankees doing Bible study in chapel. But I would then suffer a second and far worse bout of depression, which would lead to hospitalization and really a lost will to live. And it was only then that I really discarded much of the baggage that I would now know now was holding me back from living a much better life. And that took me to about 2013 when I decided that I no longer wanted to work in the metals and mining industry because Mark Twain was right when he said a gold mine is a hole in the ground with a liar standing over it. And so I got out of that business and I focused full time on working with professional athletes and the general public here in the States, doing a specialized type of financial planning. But last year during the pandemic, because of what happened in sports and the embracing of social justice, and it conflicted with my Christian views, I stopped working with athletes. And now I find myself in the twilight of my career and life, on Twitter, just do audio and video, don't even write a newsletter anymore, and enjoy meeting young men like you who have been inspired to do more than just the mundane stuff some people find themselves in. And I'm happy that whatever's happened in my life in some way or form can be of some assistance or some learning experience for audiences like yours.
Awesome. Well, thanks so much, Peter, for those kind words. And more importantly, thanks for really opening up and kind of sharing with everyone, all our listeners, kind of your full story and truth. And yeah, it is a pleasure to have you on. So Peter, this actually makes me want to start off with my first question here. You've been successful at predicting two things, not just in the stock market, but also this past year when the Habs were playing the LA. You also predicted that the Habs would lose, but you also did a good job. And as you kind of explained, you predicted with the whole Wall Street crash of 1987, and that kind of gave you obviously credibility. But the stock market rallied to new highs in 2000 as well as 2008. And you became known as the Wall Street Whiz Kid. So how do you think you earned this respect?
Well, it was actually, and you're right, I was blessed in both 2000 and 2008 to step aside and miss the big declines then. The name Wall Street Whiz Kid was given to me by a gentleman named Steve Crowley, who was a business editor for ABC's Good Morning America. I've written a book, and the 5th and final edition is out, and I changed it to former Wall Street Whiz Kid because I don't think anybody should be calling themselves Whiz when they've made and lost millions not once but twice, and that's what I've done. So there's nothing whiz about me, even though that was the moniker and I milked it for about 30 years. But that's pretty much how it came about. No one really knows the future, Ben. At best, some of us have enough experience to make a good, educated guess, but only the creator of all that is good in the universe knows the future. And by golly, I think if we ever got to look at any part of our future, we would go hide underneath the bed, because there are things that are just going to happen in our life that we can't believe happens, but somehow many of us get through it. And that's really what my life story has been about.
So Peter, what is something else that I guess people can learn if they were to read this book that you have written?
Well, failure's the norm. You're going to have to put your pant legs on one leg at a time if you want to have any chance of success. Don't be a legend in your own mind. Set a core of principles, whether you're religious or not. Moral principles are key to being successful. As I told you before we started, that Mark Twain said, if you always tell the truth, you never have to remember what you said. And that's true. It becomes very difficult, if not impossible to remember if you're a liar. And normally or not, lies normally end up being shown before too long. So truthfulness, honesty, and understanding that failure is the norm, and that you will learn from your failures, as I did. And I think the only reason I've been successful of late is because of the failures that I've had before and was able to rebound from them and have another chance. And prisons, believe it or not, while there's some very bad people in the world, unfortunately, prisons are made up of a lot of people that just make one big mistake. And if they could do it over, they wouldn't do it again. But they don't get that chance. And you got to kind of approach life like that. You got to, okay, I made a mistake, but I'm getting a chance to do it over without a penalty. Consider that a blessing.
Absolutely. Having that growth mindset, and our best teacher could be our mistakes, right? So Peter, you kind of had mentioned that, now, you're giving a lot of time online. For example, you're putting out YouTube videos on your channel. And last Sunday, I noticed that there was a video that you put out, but it had to do with the fact that gold had dropped $70 an ounce. You had kind of mentioned that somebody put out $40 billion worth of paper gold sales. So why do you think there has been a massive sell-off for gold and silver? I know you have a lot of cash on the side. When are you looking to go all in on gold? And what will it take for precious metals to break out?
Well, you're correct. Last Sunday, just as Asia started opening, not even when the full complement of those that trade gold was yet open, somebody put out $4 billion worth of gold to sell. And the first thing, other than seeing it fall $100 in a matter of a couple of minutes, one only has to be in the business a little while, let alone 38 years like I've been going. No one sells like that just because they want to sell. They want to send a message. Something was created for a reason for that. Yet to be determined as you and I speak. Normally within a few weeks to a few months, we get an idea who or why it might have been done, but as of yet, we don't know. The thing about gold and silver is, you don't want to be all in on anything. I would never suggest all in on anything. But for some reason, it managed to be a secure place as an alternative to paper money for a couple thousand years. Now, there is a generation, I like to say your age generation, and maybe somewhat older, that now thinks that, gold is, it had an expiration date and cryptocurrencies have replaced it, and long live cryptocurrencies. I don't think that's the case. I do think blockchain technology and certain cryptocurrencies are here to stay. I think one of the reasons that they've gotten to the level that they are because we're in the financial bubble of all bubbles. But there'll be a shakeout just as there was in the internet stocks, and out of the dust will come some very worthy cryptocurrencies. The one challenge for the bulls for cryptocurrencies is you're accepting the fact that somehow governments and bankers are going to be willing not to get their cut of the pie. And they never operated that way, and they'll do everything not to have to operate that way. So I still think there's a shoe to drop on the cryptocurrency market. So I would be very, very cautious at this point in time. Gold and silver, in the meantime, they may not go up a lot, but there's not going to be a very large chance of a big significant loss. And the key, if I may share this with you, Ben, and this doesn't come from me, it comes from a financial mentor back in the 80s and 90s, long has since passed, Kennedy Gamage, but was a great newsletter writer. And he said that the real winners will not be shown by how much they made, but how much they didn't lose. And so when I look at gold and silver now against cryptocurrencies or even the US stock market, I think there's a far less chance of losing principal in them than those others that I mentioned. And therefore, I think you err on the side of caution and you take the lesser of two evils at worst. And that's what I think gold and silver minimally are right now.
So, Peter, do you think precious metals and mining stocks are currently undervalued right now?
Well, yeah. One of the reasons is that, again, this was my life. It's almost 8 years removed, but I still look at them for my own personal investments. The major mining companies have never been in better capital shape since the day I started following them. They're in much better financial overall health. They're very under-owned. You would have to even in Canada, where for a lot of years mining was second nature to people. You owned a mining stock even at 8 years old, so to speak. Even there, people have moved on to other things, cannabis, cryptocurrencies, what have you. But the fact remains is that gold and silver are here to stay. They have some, fabrication needs as well, but they're still mainly driven by investment. And of course, jewelry demand, especially for gold. And so I think if you took the most precious or two precious things in my life, my wife and my daughter, and said, Pete, you get them back. What in a year? What does better or what doesn't do as bad as the other? I would choose gold and silver versus the U.S. stock market.
Gotcha. And Peter, do you think gold and silver are capable of reaching new highs in the near future?
Well, the near future, Ben, for some people seems to be a matter of minutes or hours these days. When I started in the business, research reports all had a 3 to 5 year price target. Now, if you go past 3 or 5 weeks, it looks like that's too long. So, depending on what near future is, if you said to me, can they go back in the next 12 to 24 months above where they went in 2020? Yes. Will it happen anytime soon? Almost not likely, especially since of what just happened this past Sunday. There's some technical damage. There's clearly sentiment damage. There's a bandwagon always to get on the latest thing, and the latest thing now is to be bearish on gold and silver. So I wouldn't say in a matter of days or weeks, even a couple of months, but over the next 12 to 24 months, I still believe gold will get into the 2000s. I also believe that once the inflation really becomes and recognized by everybody, that's where the real acceleration will come in gold. And then there's that opportunity to be much higher than 2000. But for now, getting back to 2000, I think is still a reasonable target.
So this actually leads me to my next question. There's been a lot of talk that our global economy has experienced some type of inflation. And some news is saying, it's inflation. Other news is saying deflation, stagflation, hyperinflation. Peter, what is the difference of each of these types of inflation?
Well, the last two are the worst to have. Stagflation is really inflation without the economy growing as well. See, if the economy is growing as well, you can live with some inflation. In fact, inflation is actually better for governments than deflation, because in deflation, everybody loses. Inflation many times is a source of repaying debts because you pay back with cheaper dollars. But stagflation, where the economy is not moving and yet there's inflation, and of course hyperinflation is when it's just kind of like you have $1 and it's only worth 50 cents when you come back from lunch. That, and we've seen that in some cases. That's hyperinflation. So I don't think we're going to face either of those two. I think the I think stagflation is what's coming. I think we're going to see a big bump in inflation. We're not going to see the continuously hope for this, economy just growing by leaps and bounds. And the political problems, and I can only speak, Ben, here in the US, but my Canadian friends seem to think they're not too happy with their leader either. So maybe we're going to coincide sharing displeasure with our leaders. But here in the US, the United States has never been more split than it is right now, other than the Civil War. So political as well as inflation are going to be two of the things we're going to talk about more in the coming months here in the US when it comes to the markets.
Okay, great. So Peter, billionaire investor Ray Dalio recommends gold investing over stocks. In fact, Ray Dalio is predicting huge inflation and has invested over 400 million in gold. Why do you think Ray Dalio is so bullish on gold?
Well, I can't get into Ray Dalio's mind, so I don't know particularly. But if he believes in inflation coming, gold, what people need to remember, whatever you needed 50 or 100 years ago or 500 years ago, an ounce of gold bought it then and it buys it now. There's no other currency that you can point it to. So I always tell people to treat gold as an alternative to paper currency. Just treat it as a currency. Don't argue, well, it's priced in the dollar, and if the dollar goes down, it gets hurt. It's an alternative to paper currency. That's why I'm never going to believe that a Bitcoin is going to replace it as a currency. And when they say it's the new gold, I think, by the way, one of the worst things you can be is first in an industry. And that's one of the negatives that's going to be an albatross for the Bitcoins of the world. There are already, and I don't want to get into it because it's not my area of expertise and it only creates hate email for me, Ben. But there are better coins out there right now if you're investing for the very long term than Bitcoin. But cryptocurrencies, as I said earlier, are here to stay. I just think Ray Dalio is more from my era, and we feel more comfortable being able to hold something, know banks. You see, that's the key. Banks have been the biggest buyers of gold. And so they're talking positive, where actions speak louder than words, and they talk negative about cryptocurrency. So everybody that puts out this thing that cryptocurrencies are the new gold, I think they're in for an education. But I think Ray Dalio just sees it as a worthy asset to have, something that's a hard asset that's worth the hold. And he's a little concerned about, inflation eating away at paper assets. That's just a speculation on my part.
So, Peter, this leads me to my next question. Do you think that the Federal Reserve is trapped when it comes to dealing with inflation and debt? How do the central banks resolve this issue in terms of monetary policy?
They painted themselves into a corner, Ben. You can't listen. When I started in the business, the United States was the world's largest creditor nation. We're not that anymore by a long shot. In fact, we have $30 trillion of hard debt now. That doesn't count for Medicare, Medicaid, and Social Security payments that are due. The money's not sitting somewhere in a bank where we just transfer it and pay the recipients. So we're probably closer to 70 or 100 trillion in total debt. But let's just look at the 30 trillion of hard debt. In 2019, because that's the last year before the pandemic that we can look at, and we did about 3.5 trillion in change in revenue taxes. That's what governments take in. We paid out about 440 billion in interest payments here in the US. If interest rates as they talk are going to go back to normal, I know it's hard to imagine this for younger folks, but when I was first looking at my house for a house in the early 1980s, the realtor said, I think I can get your mortgage at 15%. And we thought that was great. So to go back to 5% interest rates is not that high, even though we're only 1 or 2 now. At just a 5% interest rate, that 30 trillion debt, which eventually had to be refinanced, is going to cost us 1.5 trillion to pay just the interest. Ben, that's without paying a dollar for anything else in the United States, military, all the government workers. And our states, our cities, they don't have a printing press like the United States government has. They have a lot of deficits. Corporations have taken record on debt, and consumers have record debt. So the bad 4-letter word is not the word we said as kids in the playground. It's DEBT. That's the curse word for the future. That's the word that's going to turn everybody's head in the coming years. And it's a big issue. And it's not just here in the United States. It's in most Western worlds, including even in your lovely country, which was my home away from home for 25 years. So I'm just telling you that the Fed doesn't have much of a choice. Everybody thinks that they're going to stop printing money and go back to the way things were is suicidal for them. And that's why, somebody says somebody else coined it. I didn't know it. I started just calling it. What they're providing is monetary heroin. They're trying to keep the addict one more fix, hope he gets better. And all we do is make things worse by piling on debt. And we're past the point now, Ben, where we can do anything and not pay a price for it. So unfortunately, you're going to pay a bigger price than me, because the likelihood is the good Lord's going to have you here for a lot more years than me. And so that price to be paid for is going to be paid. The younger you are, the bigger the price you're going to have to pay.
Absolutely. Peter, this brings me to my next question. I've been following your work for a while. In a recent interview on Kiko News with David Lin, you said we are in the financial bubble to end all bubbles. What did you mean by this statement? How does our current bubble compare to previous bubbles?
Well, it compares because of what I just said earlier. There's been bubbles in the world going back to tulips and the railroad stocks. We've had a lot of bubbles, but we had those bubbles when we weren't in such debt that we could take from something, and when they finally burst and things don't go straight up, there was something to fall back on. We don't have that here in the States. We saw it at the beginning of the pandemic. Within a matter of a couple of weeks of people being out of work, the government had to create trillions of dollars to give out to keep things going. We have people on Wall Street that make a living supposedly about retirement planning. 85% of people that will never or are going to have a very difficult time reaching the level to truly retire now. It is the demographic argument that's coming. People are living longer. There are so many things that I can point to, and I'm not even talking to you about political and social issues. As I told you earlier, here in the United States, we've never been more split. There is no more middle. You're either on the right or you're on the left. And I don't think, other than what must have existed during our Civil War, I don't think the country, certainly in the modern era, has been more divided. And that leads us to one big problem, Ben. If we have another financial crisis, the bubble bursts, things are hurting, I don't think our two parties can go in a room now and come out with something that's worthy to give us hope to come out of whatever the dire situation we find ourselves in. So unlike in 2008, when they did a patch job, but at least they were able to turn it around, I don't think that can happen anymore. So I'm afraid, just like, even though when you light a bottle rocket, those few of the ones that kept going further and further, you thought it was never going to explode, we're going to have that. And when it does, we don't have any security net underneath us. And I think it's going to get quite ugly. So that's what my biggest concern, and why I call it the financial bubble of all time.
Okay, great. Thanks for sharing that. Knowing all this information, Peter, which commodities are you most bullish on for the upcoming year? What is the best way for retail investors to punt this play?
Well, probably your listeners, after hearing me, will go right for aspirins, because I probably gave them a headache because of the concerns that I have. But commodities are at a crossroads, Ben. It all depends, and this, I don't like copping out, but this is going to be a semi-cop out. Depending on what governments decide here, and so much of it is an impact based on what's happening with COVID and all. If they continue with their foot on the gas pedal, then commodities are going to do very well, even if economies in general slow down, because that's when the inflation comes in and all. But if we go into another hard slowdown and they put the foot on the brakes again, some commodities got way ahead of themselves. And so when I say commodities, I always kind of separate gold, especially, out of it, because as I told you earlier, I view it more as a currency, not a commodity. You know, commodities, coffee, we need it. Commodity, food commodities. Gold, we don't really need, but we want, because it has monetary implications. So commodities in general, if things get bad, don't always do as well. But there is one that I've called the single best potential bull market in my career. I became heavily invested in it for the first time in 2019. Even though I knew of it, I never really invested in it beforehand. And I believe even as we speak going forward, the best is still to come, and that's uranium. And that's because I believe nuclear energy must be, and I underline triple to your listeners, must be a part of the solution if we're going to have all this electrification that everybody's talking about. All cars are going to be electrified, trucks, buses, planes. We have 22 gadgets now that all take electricity, things of that nature. We in the United States down here are having trouble providing power at this point just because there's a heat wave or something. And all the wind and solar is not going to solve it. And if you want to go green and you don't want fossil fuels to be the major usage, nuclear energy must be part of it. And the world is bringing that in now. And the supply and demand scenario has never, I've never seen a commodity where the supply and demand scenario is so overwhelmingly bullish on the demand side. You can use one hand to count the number of people who produce it and you can invest in. It just happens to be my favorite. It's a Canadian company, Cameco. So uranium is here, I think, to go. And for the people that, and this was presented to me by a fellow Canadian of yours, wrote to me recently, said, hey, Pete, when you talk about the uraniums, make a point that's very important that people miss on. So you're the first person that I'm doing with, Ben. And he made a very good point. He said, you know, people say, oh, it's a dangerous thing. There's only been one nuclear accident where any death occurred, and that really occurred because of a human error, and that was Chernobyl, okay? The other one in Tokyo, that was the after effect. It wasn't the nuclear that killed anybody. It was the tidal waves and things of that nature. And, you know, when you look back, you should have never built the nuclear plant right on the edge of the water and all. So more better planning is coming. Plus, and Canada, believe it or not, is leading the way in this, is these now small modular reactors, almost in a sense like each city is going to have like a little nuclear reactor. So to answer your question, uranium is the one commodity. Again, if you took the most important things in my life and said, what's one commodity that will be up in value 12 or 24 months from now. It's clearly uranium in my book.
Okay, great. Thanks for sharing that. And yeah, just to add to even the whole macro picture there's even now so many people talking about it, right? There's been Bill Gates, there's even been now Rick Rule's been talking about it for a couple of years. So there's
Elon Musk has now come out about nuclear.
Elon Musk. So there's a lot of people for those who are listening. There's a lot of celebs or financial individuals who are really talking about it. Yeah. So thanks for sharing that. So this leads me to my next question. Who are your greatest mentors? Where do you suggest that millennial investors go to better educate themselves before making any investment decision?
Well, that's a tough call because I must share this with you. Like I said about Mark Twain saying, always be honest. What came most important to me, and really when I look back now in my life, when success really took hold, it was my Catholic Christian faith. And so for me, and I'm not here to sell anybody or tell anybody if they don't do this or that, but for me, the Bible became a place for great financial information. And I tell people, you don't have to be religious to read it. You don't even have to believe that the people that wrote it had anything to do with a God. But the fact is, it's been written, it's the most read book, and it just so happens it's the second most talked about topic in that book, matters of money and finance. And one of the most interesting things about that is its number one topic that it speaks against is the topic I told you we're most to be fearful of, debt. There's not a positive word in it about it. So young folks who seem to have accepted this motto now of, my parents used to say, can we afford it? Now young people say, can we make the first payment? And they're willing to take on debt in a much easier way than previous generations. And this good book, whether you want to consider it spiritual or not, its number one subject in it is the negativity about debt. So I don't have any particular mentor or financial person, certainly that's still alive. But I will say that there are core principles in the book that even if you don't want to accept who it is about or what faith was right, the bottom line is that there's good teachings in it. But I don't even think you have to go that far. As I told you earlier on, honesty is indeed the best policy, and it's tough in the world of finance. I share in my own book the times that I either pushed the envelope or stepped over the line. And so it's a very tough thing to remain of highest integrity and honesty. But if you found someone that teaches that or learn from that, not necessarily about finances, then I would listen to that in a great way, because I think that's the right road. And if you don't get detoured as someone like me that can look back now and go, boy, I wasted a lot of time over here. I thought this was it. It's not it. This is it. But being here is maybe not the most popular thing in the world, but it's the right thing in the world. So I think that's more of a mentoring that I would look at than any one individual.
Okay, great. So Peter, something that I admire about you, you're more than an investor, even though that's part of your life. That's not the everything about Peter here. You are a father, a husband, and you also have other life goals, desires, and passions. We obviously spoke about sports at the start. But I know you and your wife, Mary, are active members at Allaire Community Farm in Wall Township in New Jersey. This community is building a learning resource center in honor of the Grandich family. Why is giving back to your community so important to you and your family?
Well, it's interesting that you bring that up. So last year when I had to leave the sports world because it conflicted with my Catholic Christian faith, and it was a large financial hit of income as well as a way of life that existed for 20 years. There's an old saying, you don't have to be religious to know it. When one door closes, another one opens. And that's what happened for us. We were led at the beginning of the pandemic to a farm not too far from our home that not only took in rescue animals, but did a lot of work with special needs children and veterans with a lot of different issues. And it's too long of a story other than tell you that not only do I not believe in coincidence because of what's happened in my faith, But if I told you this story, you would absolutely agree with me. There's no such thing as coincidence. We were meant to be there. And we found ourselves that with some of the things that I learned and people I knew that I could bring to the table there to accelerate their growth and bring more services to the people that I just spoke about. And it's been a whirlwind 12 months. We've seen so many great things happen there. And let me just tell you the answer. What comes out of that is, you come home at the end of the day. I don't know how some people go to sleep, but, I try to review my day. I get up in the morning, and at my age now, I'm happy to get up. So, but I review my days and I thank God for the day. And I say, now that I think about it, what went right, what went wrong. There is a reward in your heart, and your heart pumps all the blood through everything you need working from the top of your head to your bottom of your toes. And I just feel like when you do the right thing and you're helping others and all, it just pumps easier and stronger, and you stay healthier. There's sitting there versus all the other things that you grind about and get mad and so forth and so on. And I have to tell you something, Ben, I wasn't always that way. I would go to sleep very angry, very mad at people, seeking revenge, wanting revenge and all. If you can cut that out earlier in life, as hard as it is sometimes it seems in the world, and just focus on the good things, I really think you can live longer. In fact, I'm certain there's doctors and studies and all that show that stress, and all these things now that they find that kills everybody. So this thing that you're doing, that's why I was attracted to when you wrote to me about Smeek and all. I love this thought of you. I mean, I consider it a privilege sitting here with you that maybe somebody's helpful from this and somebody's life turns out better. Because you know what? You're going to have a dash one day, Ben, you and I. It's going to be between the year we were born and the year we died. And you have to ask yourself, what do you want that dash to say when people look at it? So, hopefully people are going to say, yeah, Grandich, he stumbled, he fumbled, he kind of messed up, but you know what? It's not how he went in, it's how he went out. And that's what I hope, is said about me.
Absolutely. And you know what? That speaks a lot of not only you and your family, but also the legacy that you're trying to leave, right? And kind of like you said, you can have ups and downs in your life, but it sounds like you are more than ever sure of kind of things that you want to do out of your heart for the community and how that makes you feel better, right? So
yeah, your heart beats, and I think it beats in a better rhythm. And because of that, everything else works out much better.
That's it. And then people will be there for you. So Peter, as you know, the purpose of this podcast is to inspire people to achieve greatness and enhance their overall personal well-being. So what is your definition of greatness?
Tim Tebow. In fact, it's on my bucket list. That's the number one thing. I would like to meet Tim Tebow. I would like to meet Tim Tebow, not because he's famous, but what he's done with his fame. And so greatness doesn't necessarily mean that you have to be famous. Greatness is that you can look at the end of your life and say, you know what, whatever cards I was dealt, I played the best possible hand with them. And some of us get dealt deuces and some of us get dealt four aces. But the funny thing is, Ben, I found people that were dealt deuces seem to be much happier overall than the dealt four aces. If it was just a question of money and fame and achievement, there wouldn't be all these people in Hollywood and all killing themselves and drugs and all the other stuff and 5 divorces and stuff. See, Wall Street, let me leave you with this. I think this is important, Ben. Wall Street and Madison Avenue knowingly or unknowingly conspired decades ago to create this falseness that more money equals more happiness. You watch here in the US, the typical financial advertisements, no matter who they are. Somehow, if you make more money, you're going to have all these things they showed in the background and you live happily ever after. They would want you to believe that the guy that owns the bus company is always much happier than the guy driving the bus for the bus company. Yet in real life, it's the opposite. It's the people with little or no means that seem to be far more content than the people that have so much and yet have all these problems. So I think that's what I would leave you with, what greatness is. Greatness is willing to play the cards you've been dealt and play in the best possible hand in the most honest and rightful fashion.
Absolutely. Thanks for sharing that definition of greatness, Peter. So Peter, this leads me to my next question. who is a future guest that you would like to see on this show?
I got the guy for you. I didn't know you were going to answer me that. There's a man that I met of all things in Montreal. I went 25 years in the metals and mining industry, only dreaming of someday meeting a man of this qualification and just integrity, bar none. His name is Michael Gentili. I'll send you his information. He's a young former money manager that chose his family and his faith over money. He's been very successful. He's had a lot of success of late. But to me, I'm so grateful that I met him, and to be going out of towards the end of my career, that I finally met somebody I'm proud and would stand in a foxhole together with. And so I would tell you, if you look up Michael Gentili or send me a message, and I'll send you his contact information, I think he'd be a very good guest for you.
That's awesome, Peter. I look.
And he's the Montreal Canadian fan that I referred to in that video that you saw. So.
Okay, so that all makes sense now. I look forward to adding him to my list of great individuals to interview, and I really appreciate the generosity of you kind of connecting that bridge for me. So, Peter, where can our listeners go to connect with you online?
Well, just mainly Twitter. I mean, that's really all I do now. I mean, the blog does get some posts, but anything I put up on the blog goes on Twitter. So if you're on Twitter, it's great. If not, there is petergrandich.com. But like I said, most of my commenting now, and I don't write any newsletters anymore, it's either a video I'll do or an audio. We'll be blessed that a young man like you comes along and I'm able to share, and then I'll transmit that out to my people that follow me as well. And it's not an investment advisory service. I never wanted one client to receive favoritism over another. So I created this thing now. When people want to know what I'm thinking, I say it once, everybody hears it at the same time. It's only what I'm doing. They don't have to do it. And so I would tell them probably Twitter is the best thing.
Okay, great. I will make sure to add that to the episode notes. So Peter, I want to take the last moment here to really thank you for your time. You've been very generous, and I look forward to staying in touch with you, as well as hopefully having you on again in the near future.
Well, Ben, I appreciate it. Believe it or not, and sincerely when I say it has been just as much a pleasure for me to speak to you as you believe it was to speak to me, and I enjoyed this immensely.
Awesome, Peter. Have a wonderful day.
God bless, my friend.
This podcast is for information